Unit 2 is on accounts for general insurance companies, and we are going to once again prepare the profit and loss account and the balance sheet along with an additional account called a revenue account that is also prepared in case of your insurance companies, in case of your general insurance companies. Before we go into the problems, into solving the final accounts, we are going to just look at a bit of theory and understand some concepts that are involved in general insurance, okay, or in any insurance business for that matter, right? So accounts for general insurance companies. Now, first of all, let's try to understand what this term insurance mean. Can anyone tell me what we mean by insurance exactly? What does the term insurance mean? Or why do we require insurance in life or in business? You can just unmute and say. What is the purpose of insurance? Now we hear of life insurance policies, we hear of other things like vehicle insurance. All of us have insurance for our bikes, cars, right? Then there are business people who have insurance for their warehouses, like fire insurance is there. Okay, then there are ships that take something called marine insurance for their cargo or the ship itself, correct? And so many other different types of things. Okay, yes, protection against some loss. When we say protection, the part about something against the loss is very correct, is very true, but we shouldn't use the word protection for insurance. Okay, it definitely is against losses, but it doesn't exactly protect you from that loss. Like, take for example, if I tell you that I have a life insurance policy. Okay, now what does this life insurance policy do? Just because I have a life insurance policy, it does not mean that I'm never going to die, isn't it? I have the insurance policy, let's say I've taken the insurance policy for the next 10 years or 20 years, but does that mean that I will be protected from the risk of death? Does it mean that I'm never going to die? No. This life insurance policy, what it simply does is it recompensates, or it gives me some compensation, or it gives my family some compensation after my death, correct? There is a term that we normally, very commonly use in insurance. That term is called indemnification. Okay, indemnify. It means, the term indemnify means to make good the losses. And what do I mean by make good the losses? Making good means to compensate, to give you back something in return for all the loss that you have suffered. Like, say for example, I have say a bike insurance, or my car has insurance, and then that car meets with an accident, it suffers some kind of damage. Okay, something breaks, something is destroyed, damaged. I can claim from my insurance company to pay me for that damage that I have suffered. Now, can the insurance company protect me from that damage? No. They cannot take guarantee that I will never meet with an accident, or my car is never going to be in an accident, correct? They can at the most, if you claim your insurance money, they can pay you after checking, after surveying, after seeing how much damage has been done. They can pay you some amount to help you with that damage, to make good that loss which you have suffered. So what are they doing? They are not really protecting you, they are just indemnifying you against the loss which you had suffered. Okay, so insurance is not just it is not really about protection against losses, but it is more about indemnification against losses. Okay, and there are different terms. The insurer and we have parties like the insurer and the insured. Now, who are these? Who is the insurer in this case? If you have an insurance policy with LIC, who is the insurer and who is the insured in that case? In this example, yes, the insured is the one who takes the policy, that is we. Common people or businesses, whoever has taken an insurance policy or who has, or who might suffer the loss, that person is called the insured. Okay, and the insurer is the company which takes that risk or it undertakes to indemnify you for the loss. Okay, it is that company which is going to take some premium amount from you year after year, and whenever you do suffer a loss, you can claim your money from that insurance company. Okay, the insurer is the company itself and insured is the one who takes the policy and somebody who might suffer loss at a future stage. Okay, same way there are certain other concepts that you need to learn, you need to understand. Policy and premium. Now, what is a policy? What does an insurance policy mean? Normally, once you have entered into an agreement, like insurance agreement, they give you a document, isn't it? Give you a document which contains all the details of your insurance policy. It will tell you about how many years the policy is for, what type of policy is it, first of all, whether it's a term policy, whether it is a money back type of policy, okay, endowment policy, all of these different terms are there in life insurance. So it tells you what type of policy you have taken, for how long is that policy, what is the duration, the term of the policy, are you going to pay it for 10 years, 20 years and so on. Then it also tells you what is the sum assured. What do we mean by this? Sum assured is the amount of money you are going to get at the time of the maturity of the policy. Okay, especially in case of life insurance, sum assured means amount of money you will get once the policy has matured, right? And other things, other terms and conditions related to the policy, whether you can take a loan on the policy, whether you are going to get some bonus from from that policy which you have taken. All right, all of these details will be mentioned in that policy document. Now, what does premium mean? What do we understand by premium? This is the document, contains all terms and conditions, with terms and conditions. Okay, what does this premium mean and who pays the premium to whom? Which party, insured or insurer, which of these two parties pay the premium and who receives the premium? These terms are very important because all of our problems will be based on your understanding of these terms. Okay? Yes, it is the insured, that is we, who pay the premium to the insurer. Meaning the insurer is the one taking the risk. He says he is going to pay us if ever we suffer a loss, isn't it? Now, he is not going to pay us for free. He is not going to pay us out of charity and just, because he is very nice to us. He is going to pay us out of the amount that we keep paying him year after year. We will pay a small premium on either a monthly basis, quarterly basis, yearly basis, okay, sometimes even in lump sum. Like people pay a fixed amount. It's like how you pay EMIs, a fixed amount of EMIs every month. Same way, after calculating how much duration of you have taken that insurance policy for and what is your age, correct? Your age is very important in case of life insurance, or even in case of bike, they check what is the, how old your bike or your car is before calculating your insurance for that year, right? And accordingly, they will calculate one amount which you are either supposed to pay monthly, quarterly, yearly basis, annual amount, okay? And this amount is called the premium. Premium is something that we pay to the insurer so that eventually someday if we do suffer a loss, or let's say in case of life insurance if we do die, then some compensation will be paid either to the family in case of life insurance, or to the person himself in case of all other type of general insurance. Okay. Now another important term. Okay, premiums are, like we said, installments. Another very important term is a claim or claims. What is a claim? Yes, what do we mean by a claim in case of insurance? And when does it arise? Ever come across insurance claims? Yes. Yes, there is, if you do suffer a loss, like for example, you took fire insurance for your business, okay, and your whole godown, your whole warehouse is currently insured. There is fire insurance on that warehouse, okay. So let's assume that your warehouse did really catch fire, okay, it really was on fire and you lost a lot of your stock and a lot of your warehouse building got damaged in that fire. So now is the time to make a claim. Claim means asking your insurance company for that money which they promised you, asking your insurance company to indemnify you. Now you have been paying premiums for a very long time, you have been regularly giving them that little money installments every single month, or periodically, and now you have actually suffered a loss. So you need to ask the insurance company for indemnifying your losses, okay. And again, they will not just take out the money and give it to you. They have a whole procedure of checking, evaluating. They will see how much damage has been done, how much has been really destroyed in that damage, okay. Like you may have had goods worth rupees 1 crore in your entire warehouse, but maybe not all are damaged, maybe only part of it is damaged, okay. Some 50,000 worth or 5 lakh worth of goods are damaged, but not everything is. So who checks that? The insurance company. They will come there, they will check the damage, they will survey the whole place, the whole area, and they will value it. They will see how much value has really been lost, and accordingly the whole procedure of filing your claim is going to go ahead, right? And they will decide what amount to pay you and finally pay you that claim amount, right? So remember like this, premium is what the insured pays the insurer, correct? So now since we are going to do insurance company accounts or final accounts, we have to think from the point of view of the insurance company. So for insurance company, premium is an income or an expense? My next question. For an insurance company, will premium be income or an expense? For the insurance company, not for us. Yes, for the insurance company, premium is going to be an income. It is going to come into the business. Alright, so we call them premiums earned, right? Premium which has come into the business. The clients who have taken the insurance policy will pay the premium to the companies. So for insurance companies, premium is always an income. Let's look the other way around. What about claims? Claims are expenses or incomes. Do they come in or do they go out of the business? Expenses. Very good. So claims will be something that the insurance company pays to your clients. Whenever the clients claim or whenever the clients say they have suffered a loss, the insurance company has to pay the clients. So understand these two. Just final accounts is extremely easy as long as you know what is debited, what is credited, what is an expense, what is an income, what is an asset for you, and what is a liability. All right. So in this case, premiums are earned, they come inside the business, so they are an income. Claims are incurred, all right, they are an expense and they go out of the business, so they would be under expenses.